TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials down 104. You get NASDAQ off 37. S&Ps are off 12.5. Gold is smashing gold. It's down $30 at $1,180 an ounce. Silver's down 76 cents at $15.90 an ounce. Platinum's off 22 at $11.92. You get light sweet crude flat at $58.68 a barrel. Bonds, the 10-year down 18 ticks, 127.30. 30 years off 1 point and 8 ticks at 158.20. Both of those are going after their March 16th swing low. I expect they're going to get hit. King Dollar's flat at 95.31. King Dollar came into its March 18th swing low yesterday with juice. That means King Dollar wants lower price also. Euro's up 16 at 111, and you get the yen up 46 at 119.48. What do we have out here? Okay, so check it out. You had the Fed turnaround, status quo, bottom line, the market saying you might have status quo, but guess what? The bond market is projecting that short-term rates are going to go up. The federal futures is projecting that it's not going to go up until December. Bottom line, market's pushing it up. What is that doing to the S&P? S&P was subtle yesterday, but you had an expansion of volume as you were going sideways to slightly lower. If you take a look at the SPY, we're at 209.08. That baby is on its way down to the 204.40. The larger issue, of course, is not the 204.40, nor is it the issue of the December 16th swing low of 197. The issue, folks, inside the S&P is the October 15th trading area. That's 191 at the high. That's 181 at the low. That's where this baby is heading to. We take a look at the NDX 100. Use the 3 Qs to the NDX 100. NDX 100 is now in its lower range. We're down 93 cents. You're at 108.41. Anything inside 108.94 brings you down for a test of the high volume swing low of March 26th, which is 104.24. Gold. Let's go to the gold contract. They're taking gold apart, and they're taking gold apart, folks, not only at the end of the month, but what you also have is that we're coming into a Friday. Gold's down $29. You're at 1180. Bottom line, gold's going to need a lot more volume to get croaked here. We're at 122,000 contracts. You're going into 207,000 contracts. If we go over to the GLD to see the correlation inside of that, GLD is down $2.17. You have 2.5 million shares. Well, the 2.5 million, folks, you have to do more than 12 million shares in the gold contract. High volatility, no doubt. Gold still wants higher price. Now, bonds. Let's go over to the bond market. What do we have with bonds? If we go to the 30-year bond first and take a look at it, this is what you have. 30-year bond is coming into the March 6th trading area. March 6th, folks, is a vicious day. The bond went from 159.07 to 154. We're doing that with dramatically lighter volume. So I expect what you're going to see here is that the bond market basically is going to come down into this area, can make it all the way down to 154, by the way, and basically reject it, get higher. If it rejects the 159.07 today, guess what? That would be the move that it wants to go higher. King Dollar. What did King Dollar did? Right down to the tick. Pretty amazing, actually. The March 18th low, folks, was 94.76. We hit 94.75 yesterday. Bottom line is that today you're at 95.20. What you have the volume characteristic is 48,000. So that means we're going to do 100,000. Dollars going south with high volume. Dollars topped out. Markets topped out. Gold's doing a retracement with volume. I suspect gold's going to go higher. Market's going to go lower. Bonds are going to go higher. Dollar is going to go lower. This 10 a.m. update is brought to you every day by Everbank. For more information on the products they offer, visit everbank.com/TFNN. Have a great day. Have a safe day. Look forward to speaking right back here tomorrow. Get those stops in, folks.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the Future Economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.